Hello guys, and welcome to another video on ManoFX Live's channel. So I'll be talking about DXY. I'll be making an outlook on DXY, Euro USD, GBP USD, and the likes of it, but I will be talking more about the dollar than every other pair, because the dollar is more like the market driver of these pairs. So if you remember, I start with Euro USD. Remember the last time I was bullish. I said I was bullish on Euro USD, and yes, indeed I was. I took a position. I was looking at Euro USD to buy from this area. There was an IPO here, an IPO being, or an IPE rather, being the inefficient price action. Good. And we see that is what happened. I took a buy position on TradingView, which is still open, by the way. The position is still open, but I was able to, so I got in here. Hold on. I got in over here. All right. I got in over here, and then market pumped a little bit. It came back and took me out on a break even, but I didn't break even this trading view trade. So what happened was that the market actually did a double inducement. It induced the first time I got in, I was right, and then it induced again. Normally, when you see multiple inducement like this, you just have to be careful. It means the market is, it's in a manipulative environment, and you want to be careful um, in the kind of trades that you take and the decisions that you make generally. So very quickly, I took the buy over here. I put out this on my Telegram channel, on my Telegram group, where I have a number of friends where we share ideas and trade together. If you're interested in joining, you can. It's like a closed circle, you know. It's just now we you understand, just us in there doing our thing. One of these days, I'm gonna go open a Discord server and or a Discord group and have people from all over the world joining, to create that broader access, because I believe we are growing, and yes, I should create that platform where I can accommodate enough people. So let me break down this trade really quickly. I'm going to stand, like I said from the onset, Euro USD is in a bearish trend, all right? Do not mistake this bullish short-term buy for a shift in my buyers or anything. Euro USD is bearish, and very soon I'm going to be looking for shorts on Euro USD, provided that the market moves to a certain area. I'm looking at it to move towards 15421 or around 15200-ish to see the sales begin. But before that happens, like I said, you need to understand when the market is in buy mode or when it is in sell mode. On Euro USD, the market is bearish, but we are currently experiencing a higher time frame reversal, or a higher time frame retracement rather. So this market is going through a retracement, and when these retracements happen, you don't want to find yourself selling. You don't want to find yourself selling when the market is retracing, a bullish retracement of the higher time frame. You might get chopped out um more often. So the retracement, all right, will usually start after price break structure. Like I said, the market moves in a kind of way, it is not usually this clean, but this is how the market likes to move. And usually it likes to move in a symmetry kind of way, symmetrically, like this. And you see it moves in a channel like kind of way. If you know how to use this channel, you might be able to, get a good, correct, and clean bias most of the time. So we see on the daily time frame, if we map out this structure all the way from here, I wanna disconnect this trading view so that it doesn't let me do it like this. Paper trading. I wanna log out. Yes. So the lines don't mess up what I'm doing. All right, so I continue. If I try to map out the daily structure we have on Euro USD, let me start with Euro USD. We see very quickly that the market was bullish, like so, just taking the external, all right, externals, and then there was a shift here. This is a change of character. This was the last bullish break of structure, change of character. We had this lower high form, and now we have this break of structure forming over here. So that said, we are in a tradable range, a bearish tradable range that started from here, but in some sort of sense, we can also use this high onto this high because it is the last high that was created before the break of structure. I'm going to explain that. You see, there are two things. When a high is established before a market break structure, that high can either be liquidity, no doubt, as in structural liquidity, or it can be a strong level of support or resistance. All right. So very quickly, we see with the external structure on Euro USD, we see a bullish break of structure over here, bullish break of structure, and then we see a change of character over here, which is more like a bearish shift. I like to call it a market structure shift, a shift in the structure. And then what follows is a break of structure. So currently we have seen a break of structure on Euro USD. What does that tell me? That tells me what the market likes to do is it likes to retrace back into premium or discount prices to create a better buying or selling opportunity. So right now I'm expecting Euro USD to do something like this, probably come into, because now we are talking about an overall structure on the daily time frame. So I'm looking at Euro USD to come into these prices, probably 1.65 thousand or 1.64 or around 157,550 thereabout. That is where I'm expecting sales to kick off from, and I'll be going to the DXY shortly to explain why I think the market is going to go there on Euro USD. So we see this break of structure, price moved down. I'm expecting a move up. Now, for that move up to happen, for somebody like me that trade about 2 to 3 pairs, not really a lot of pairs, you want to be good enough to catch higher time frame retracements, because most of the times for 2 weeks you might not get the main trend happening. The market could chop, the market could retrace. And when these retracements happen, all right, you want to make sure you have the ability to sit out and do nothing. You either have the ability to do nothing and wait for the main trend to start, where you can now start looking for new setups to follow the main trend, or you find a way to catch the retracement. And now, catching that retracement, you only have two trials, because if you lose your first trade, lose your second trade, catching the retracement, it's an unhealthy thing to do in the first place. You can just sit out and wait for the main trend to start. So now, on Euro USD, we see this happen, and we're expecting buys up for the past week. Let me make all of this. I want to make all of this just appear only on right now, current interval only, just for now. All right, so now we can see, since these 2 weeks did a very strong sell or dump, we've seen the past 3 weeks, 1 to 3, just consolidate. And that goes to prove my point that every time there's a break of structure, market likes to contract, reverse before pushing back down. But when you see something like this happening, where market breaks structure and then market probably breaks structure like this, and then the market just keeps pushing down without doing any deep retracement, you just know there's some fundamental involved, or there's geopolitical news involved, or something pushing the market down. So that was that buy on Euro USD that I spoke about in the last video. This was it. I still have my targets all the way here, up to here, but I got taken out on a break even, on a positive break even on my actual account, when price reversed and hit this. Now I'm on this trade that I am already on break even before the market closed. Before the market closed, I got on another buy on Euro USD. Now I can on all intervals, please. So on this trade right now, I'm on this trade and I expect it to continue going up because this area right now is, I'm going to take this out. This area right now should stand as a solid demand. Okay, while I have my skepticism and I'm not very confident on the trade holding, I was going to close it out before the market closed, but I wasn't on the charts by the time the market closed, and it didn't hit my break even because I set a break even there so the market could hit it, and I know, okay, it probably reversed and I'm done for the week. But it didn't hit the break even and the market closed here. So I'm expecting it to probably continue going up because while we have these IPOs or IPA rather, these inefficient price actions, which is the total fill of a fair value gap, while we have this on the 4 hour time frame, this is 1 hour time frame. On the 4 hour time frame, we see that this was tapped or near tapped, but I think price had done its job here. But over here, we see that the IPA has been taken. Now it is an EPA. First, it was an IPA, it was an inefficient price action. Now it is an EPA, it is now an efficient price action, which means the fair value gap has been filled totally. And usually, everything that happens above an IPA is liquidity. What do I mean? I'm going to do a little bit of tutorial on that now. All right, so you see, price create a fair value gap, and then price buys up and does a little bit of dance, but doesn't take out this IPA, which means it doesn't tap into this area. It doesn't come as low as this. Usually, everything that happens above it is liquidity, in such a way that if we take a good look at this area over here, we see price dip, didn't respect this fair value gap, which is fine. There is another below, so yeah, I expected that. We see price dip, come just close to the low, or this high rather, this IPA, and then we see it start to buy. A lot of people would have been triggered by this buy. All right, now to me, this is a liquidity story. It is a liquidity story when early buyers are being induced to get into the trade. I see that as liquidity. So I just want to be patient for a little bit and see what happens. And when that happens, yeah, I now have more peace of mind to engage in my trades, to look for signatures to buy off of. So if you more times than usual wait for price to tap into EPAs before you start looking for the move to continue from, you most likely avoid a lot of inducement. If you don't know how to read the liquidity, if you don't know how to see the liquidity before it happens, just in all of your setups, try to wait to see these mitigated first. If you can wait for that, then more times you avoid traps. You avoid traps. So what the price do? Price came down, started buying. A lot of people would have read this as some sort of buy, and then boom, it failed. I didn't get it when it failed. I was expecting this to sweep again because this is another thing. We have POI inducement, we have entry inducement. Look, the forex market is a losing game. The forex market is looking to take your money. It is looking to, it is just out there to help you lose, not make you lose. It's gonna help you lose. If you are indisciplined, you don't know what you're doing, you don't know how to approach the market, or you are impatient, or you're still a newbie, or you've not learned enough lessons in this market, the market will help you lose. All right, until you learn your lesson. So what it did here is it helped a lot of people lose here by coming into the POI, by coming into this point of interest, and it induced a lot of people lost in these early buys. Now I could be getting induced over here, this could be an inducement, another inducement, but I have seen an inducement happen. All right. Now, people to keep telling you when you don't see the liquidity, you are the liquidity. If you can't see the liquidity, you are the liquidity. While that's true, well, you are always the liquidity because your position is money. But how can you be the right liquidity? That's a question. You can only be the right liquidity when you have seen the fake liquidity taken out. When you have seen the fake liquidity taken out, that's the only way you see the liquidity. You keep on saying, if you can't see the liquidity, how do you see the liquidity? You see the liquidity only after it has played out, only after you can see the liquidity. So you are not the liquidity because you did not engage when liquidity was being taken out. So you saw it being taken out, and now you can guess the probability is higher that you are no longer the liquidity, which is what prompted this buy. I saw these inducements, these early buys before the IPA tap, and then price just came back, sweep all the lows, tap into the IPA. That was POI inducement, and now I engaged. I could be liquidity here, but I have a much better probability of not being the liquidity because I have already seen this play out. So that is me, seeing the liquidity and not being the liquidity. So I'm not going to be surprised if the market's open and it's a continuous buy. All right. In fact, it is something I kind of like hope for or something I expect, but I won't be surprised if this goes down once more. I'm not going to be surprised because while the 4 hour is already filled and there's really nothing on the 4 hour time frame to want to go back to, if you go to the 1 hour time frame, the market can use anything as an excuse, all right, as an excuse to take your money. Market can use anything. When you go to the 1 hour time frame, you see this unfilled fair value gaps over here, and this POI can be used as liquidity. All right, that this is an excuse. And if I'm not protected over here, I might just keep trying to force buys in these zones and regions, and I keep losing money. And then what am I going to see? I'm just going to see that um eventually the market just keeps doing this and probably does this and goes up. And then I'm gonna be like, oh, so this is what happened. But I could have just waited to see it happen. And if I had waited and I saw it happen, then I am no longer liquidity because I have seen liquidity engineered and been taken out. All right. So that's the recap on the trade I called out last week. I'm positioned here on the demo just to, to show that I took it, while on my real account, I got positioned higher, just risking the same 20 pips, and I go out on a 1 to 2.8. I got out on a break even over here. And in the position that I held throughout the week, I'm expecting it to continue or just fail at the start of the week, and I'll be fine with it because I'll be looking for another signature to see if price strips this and there does something specific that I could follow in here, or if that doesn't happen, I just wait for everything to sweep and we go from there. That's that on Euro USD. What is my outlook? I'm just going to use this opportunity to be done with Euro USD. What is my outlook on Euro USD? Having said that, my outlook is still bullish. Honestly, I'm still bullish on Euro USD, and we'll see the reason on the dollar after Euro USD. So I'm expecting Euro USD to buy up into these areas because that is where premium. Let me extend this a little bit. Okay. Now, if I use the high before the break of this structure, of this bearish structure, we see that the OTEs, which is the optimal trade entries, fall around this area, which is where the fair value gap is. Good. And when I look at that, I think that the market is just gonna respect this internal high because it could be a strong supply zone or it could be liquidity, so the market can do this and sell off, or it could come sweeping. Then sweeping it, it will tap into the overall trading range and just start its sell off. Before that happens, it could take another week, it could take 2 weeks, because now we've been consolidating for the past 3 weeks, which I very much expected, and I spoke about it in my community, saying now that we have this sell off happening, I don't think something will happen on Euro USD for the next 2 weeks, 3 weeks. And if you look at that, that 3 weeks is already almost a month. And when you grow in this market, you tend to understand that when you don't get trades for 3 good weeks, it is fine, because when you know what you are waiting for and why you are waiting, it is very easy to be patient. It is when you have not spent a lot of time in this market and when you have not actually taken time to learn from your mistakes, that's when you are continuously inconsistent with your approach to trading. So basically, that's that. Still bullish on Euro USD. So I'll be looking for buys on here to continue. I'm reiterating, talking about it again, so that whoever watches this video, my followers, and you're looking to get engaged with your entry model or your entry pattern, you know where to expect buys from. All right, so I'm looking for this to continue, for this buy to just kick off, for it to sweep continue, or eventually sweep this POI as a POI liquidity and continue. And all right, I was going to talk about POI liquidity and entry liquidity. Let me just quickly explain that one. Now, POI liquidity in the sense that there is a point of interest where you're expecting price to kick off from, where you're expecting the buys, for example, to continue from. All right, price would fake a lot of times to want to buy, but it will not buy well enough until it has taken that liquidity. Now that is when you see things like this happen. Price will come here, buy, fall back into the POI, fall back in, and then some people are still forcing buys in here. It could probably fake you out and then just sweep. Now when it sweeps this POI low, a lot of people will have their stop loss here. A lot of people will think this is a change of direction and it's about to go sell. A lot of people are already getting in on sales here. What it does is it just creates a small change of character that is not even obvious, and it just changes the character and boom, starts buying heavily. And then you'll be like, oh, what happened? That was because your POI was induced. Your POI wasn't marked for death, it was marked as liquidity. That is one. And now for the entry POI, the entry POI is usually engineered liquidity. All right, it is usually engineered liquidity. That is when you see something like this: price taps into your POI once, it gives you a buy, and then it sweeps the old buy idea. It sweeps the old buy idea, then it provides another one that holds. That is engineered liquidity, and that was what I was waiting for in this trade over here. After this happened, this is a state of I call it a state of delivery. All right, it's not just not this is a behavior. When price wants to move, it kind of like creates a sort of a behavior that kind of looks like it wants to buy before it gets to the POI, and then it fails, and then you are wondering what happened. That is, before it hits the POI, price creates a behavior, a liquidity behavior. While after it hits the POI, it now starts delivering. It could still do a liquidity delivery. And I'm going to explain that in a bit. Price taps into your POI once. Most of the time, it just moves. But when it wants to induce or engineer liquidity, it gives you reasons to buy. Example, this is a reason to buy. I'm buying right here because this is an inducement already. And if I see that being taken out, it means I am most likely not going to be the liquidity anymore, because I have seen the liquidity being taken out. I have seen the liquidity happen, so I am not the liquidity. And that is why I'm positioned over here. And then we see price tap into the POI now for an entry engineered liquidity. Price will tap into the POI once, give you reasons to buy, as in fair value gap, structure, and all that, and then just sweep everything, make it fail. And then you see it create a small change of character or break of structure to the upside or a fair value gap. Sometimes it doesn't even tap the fair value gap, but it creates it, mitigates it, and then it pumps, it runs. So I'm not going to be surprised if the market opens and takes me out of here as an entry liquidity. It will be fine, but I'll be ready to engage again if I see some signatures happen over here. And if they don't happen, then the market might just sell off to take off these lows, and that'll be fine. Now, moving on to DXY, I want to talk about why I think that the market is going to remain bearish for a while on DXY. Now over here we see this happen. I'm gonna hide this for now. Okay, hide, because I need that as of as a reference point for eventually if one of them happen. So very quickly, I was gonna, if you watch my last video, you would see where I spoke about DXY selling, but in my Telegram community, I spoke about this IPA over here, which is now an EPA because price has tapped into it. So the price action is now efficient. This is now an efficient price action. It is no longer inefficient. So I spoke about this, but it wasn't, I don't think I spoke about it in the last video because I was already expecting price to move from here. Just like I said, everything that happens above an IPA is liquidity. We see price had every reason to just move up, tap into this IPA and sell off, but it didn't. It decided to come close to it, create good moves of sales, and then just buy back up to go take it out, and then boom, that was when the main move happened. So that goes to prove my point that if you can wait for IPAs to be taken and you don't know how to read liquidity, you'll most likely be able to sit out on the whole liquidity story. You'll most likely be able to wait, avoid being getting chopped or trapped, and then follow the main move. So now, if I use my part two to talk about this Euro USD DXY, we would see on the daily time frame. What do we have over here? A break of structure to the downside, which means dollar was bearish. Change of character to the upside, dollar became bullish. Now we have, this is a fair value area, but it is also a break of structure. So we have a break of structure over here. And what does that give us? This gives us an entire range starting from here. Yes, this is the beginning of the move all the way to this high. This is where it broke. So, but we can have structures within structures, and because most of the times when price takes liquidity, it may leave an inefficient price action and it just keeps going. Most of the times price purposely lets price action be inefficient and it just leaves it there. When that happens, it is fine to understand that price is not going to come back there. You look for an entry sequence and you follow the price action. While I don't want to delve too deeply into this and say, oh, price is going to sell off all the way into here. No. This is already a wide enough range for me to want to work with. And then if I see that the DXY or the dollar now start selling into these lows, then I think that's concerning for the dollar. We could see dollar start a bearish but this is supposed to be protected. We could see dollar start a bearish move and a bearish change of character or bearish ideas. Okay, this is on top. So price man, we just wanna, it's all fine and good. So what do we see here? My thought process now on the dollar on the daily time frame is we are bullish. Yes, we are, but as you can see on the weekly time frame, if I go over to the weekly time frame, there's something that happened over here. Every time this happens, it calls for, this is a liquidity story. Now we see price create a bullish fair value gap on the weekly time frame for that matter. So that tells me that is huge. That is a real huge liquidity story. And we see price last week come into this area. We didn't tap into the inefficient price action. That tells me something's fishy. That's liquidity. That's a story. That's something being engineered. Because tell me why you just didn't tap into this and move. So we understand, okay, this price action is efficient and we can see the XY start buying back up. But no, you came close to it, you rejected. So that is you trying to trap buyers of the dollar. to think, okay, probably the buyers have started and now they're engaging in the market, but eventually all of their money is going to get chopped up. And when we go to the 4 hour time frame, what do we see? Currently, what breaks are we seeing? We are seeing breaks to the downside, which is quite obvious. It could be temporal, it could be um, just short term, but it is what is currently happening. And before this break happened, what do we see? We see a high establish itself before the break. Now, like I said, the high before a break of structure can either be liquidity or it can be a strong area of supply, which means price might ignore every other thing above it and just this is an IPA. So very well that can be a liquidity story happening. All right, but before that happens, what do we see here? This is a supply zone. It's another block. Just gonna make it a sell block like that. And we see price tap into it. All right, so this can very quickly just start the move, and we can see on Monday continue tap into this IPA, and then we see price continue. That can very much happen. Yeah, that can. And we see this break, internal break of structure. I'm gonna call it an internal shift because we are bullish overall. So whatever is happening right now is an internal shift. Now, seeing that internal shift happen, I'm forced to believe that my buys on Euro USD has a high chance of holding. That's a high chance of holding. So we see a shift happen on the DXY. If you look at this channel, we see this channel break as well. Let me make it the default one. As you can see, the market has been moving in a channel-like formation. It has been moving in a channel-like, and most times, if it doesn't move from the first band, it's going to move from the lower band. What do we see? We see it moving, tapped into here, pushed up, and now it's breaking below it. I'm going to make it minimalistic once more. And over here, we can see the channel. And that is what price just broke below. Price broke below it, and I think it's using it for a support to push back down into this liquidity story. So for this week, if this week does not chop up or consolidate once more, this is a liquidity story happening on the dollar. We are bullish, yes, but price came very close to an IPA, rejected, and I think it is gonna come for that IPA because institutions are always going to look for a better price. Institutions are always going to look for a better price. And when we look at this range, this trading range, where do we have discount pricing? We have discount pricing over here. Once it goes below 50%, it is discount. When you are buying, you're looking for discount pricing. When you are selling, you're looking for premium pricing. So this over here, it is discount pricing of the range. And I am expecting that institutions will want to get in on a very good price, which means they might want to push price lower into these levels, probably take this IPA and move, or use this area as liquidity, tap into these lower levels and then move. Why do I think price might even come lower here? Because it is breaking down. If price is taking weeks to create a breakdown sequence or a breakdown setup, or if it's showing you that structure is breaking down, it's not just going to be breaking down for nothing. It might have reasons to go lower. It might be creating reasons to want to go lower, or it could be trapping traders. Nothing is random in these markets, regardless that the forex market is a game of probability. It's a career of probability, but nothing is random. I tell you, everything that the market does is planned. It is all an algorithm. It is all in the decisions of the big money movers, the institutions. Everything is all engineered. All right. So you just have to be disciplined, not entirely smart. Yes, you have to be smart, but you have to be disciplined. You have to know why you're waiting and when you're waiting. I'll give you this short plan on waiting. Every time there's an impulsive move in the market, whereby the market is bearish, but then it pushes bearish this week and it really goes, you want to wait for the market after that week closes, a bearish week. You want to wait for the market um to reverse before you engage on that move, on that trend again. If the market, so if the last thing the market, if the last thing a market did was sell very hard, was just drop and drop and drop, and you're looking to catch that drop, and then there's a break of structure, forget about that drop. Wait for price to come back into premium. And for price to come back into premium, understand that you might have to wait for 2 weeks, sometimes for 3 weeks. All right, so give yourself a plan, a framework of, okay, I need to wait for 2 weeks after an impulsive move. Because if that happens, you might be able to avoid chasing a trend that is starting a higher time frame retracement. A market starts pumping and selling now, you were not able to catch it before a break of structure, or you were not able to catch it at all, and then it becomes oversold. A market is never oversold anyway, but let's just use that terminology. It becomes oversold and it breaks structure. And now because you missed it, you're like, man, I need to get in on this sell. It's gonna happen again. It wants to happen. And now you are chasing setups. What might happen is the market will start reversing or start retracing into premium pricing, into a better area to sell or to resume sales from. So if you see a huge sale happen, wait 2 weeks, 3 weeks, sometimes before you want to follow a sell trend again. Because what you want to do when a market really sells hard is on the daily time frame. I'm going to show it really quickly. Wait and see if any bearish candle, for example, I'm going to use bearish candle. Wait and see if any bearish candle has been engulfed. Wait to see if any bearish candle has been engulfed. There's nothing on this time frame, but let's use this for example. Just watch this now. We see this market sell on DXY. Okay, let me just do this, and then it breaks these lows. It breaks these lows. Now watch this. We have this bullish candle over here. We have these bearish candles. The last bearish candle was this black guy over here. Now, where does a white candle close above its closing? This little small candle over here, I guess. Yes, this is a much more visible close. And what do we see after this? We see a couple of days, 1, 2, 3, 4, 5, 6, about a full week of bullishness. If you were trying to catch a sell because you saw this market sell off 1, 2, 3 in 3 days, and you're like, oh, this market is selling off. How do I wasn't able to catch it in any of these days. I think it's going to keep on selling. You are wrong. Why? Because the market just broke structure over here. What it likes to do after a break structure is it likes to rebound. It might want to come into a better pricing, premium pricing. And when you see that happen, you're trying to catch sales, you'll be losing. So what you want to do is wait to see one of the bearish days in the last series of candles that was created. Let it get engulfed by one bullish day or a couple of bullish days, and try to catch a bullish setup to move into that premium. That is not financial advice, but I'll tell you, rather than forcing sales, you want to counter trade it. When a retracement is happening on the daily time frame or a 4-hour time frame, these are big enough time frames for you to try to counter trade them into premium pricing on your 15 minutes, 5 minutes, 30 minutes entries, like you see fit, whatever your entry model is. So you don't want to be chasing a trend after it has broken structure. You want to see if you can catch a retracement or just wait for it to come back into premium pricing. That is the best approach you might have. And on DXY right now, what do we see? We see this market do an internal market structure shift. Okay, it breaks down as such, like this. And what do we see? This is a black candle, and then price got bullish, 4-hour time frame, retrace into this high. This high can be a strong supply zone, which means it can cause price to fall when the market opens. We could see price just melt down into here and start to contract again for another 2 weeks. So before all of this will happen, this is July. All of this might happen in I don't know. It could take 2 3 weeks for all of this to happen. So July could be done. Probably in August, we could start seeing huge buys, maybe from here to move up, happening August, September. Again, you understand? Because it's going to take time. Is either that or price has decided that, okay, it is enough. I'm done selling and I just want to start buying for some reason. And then price just keeps taking off from here. And that's going to be understandable. If that happens, I know how to position myself and follow the market. So, why do I think the market is bearish? I think the market is bearish currently, temporarily on DXY because we have an internal shift. We have liquidity stories that price may want to aim for. We have this 1 hour IPA, a price ignored by a few pips. Price ignored it, and I think that is on purpose. That is not random. That is trying to induce people to think a buy is starting, whereby there is an overall structure that is being created, very structure, and then we see price just melt, tap into the IPA and move. Or it could melt, come into these inefficiencies, these fair value gaps, create a setup, a buy setup, and then just buy from there. But overall, the DXY is a bullish market. I've been basically looking into just EURUSD and BTC because GBPUSD is on the rampage. It's just while I understand that, I just look at I was a GBPUSD trader for a long time, most of the time in my career, but I haven't touched this pair in I don't know 4 months. I haven't traded GBPUSD, not a single trade. That's because EURUSD is more cleaner, has been giving me more cleaner price actions and setups. But I just look at GBPUSD to see if there's a delay coming because most of the times you are waiting for a sell because you think dollar is going to buy and then EURUSD just won't sell. When I go to GBPUSD, for example, take for instance, EURUSD just wouldn't sell, and I go to GBPUSD, there is an unfilled fair value gap up or there's an IPA. I just keep it in mind that okay, DXY is just waiting for GBPUSD to tap into that IPA. When you grow in this forex market, you'll be fluid. You'll be able to come to an understanding, personal understanding of the market. That's when you see somebody has found an edge. An edge is an understanding of the market that you have tested over a series of trades whereby you are net positive. Let's say in 100 trades, and even if you win 50 trades, you lose 50, it gives you a minimum risk to reward of 1 to 2 or 1 to 3. You'll be profitable, because if you lose 50 and you win times 2, 50 times, that means you've won 100 and you lost 50, so that's 50-50. You are profitable by half. You understand me? And that's the general idea of these markets. That's the general idea of finding an edge of profitability. Profitability comes from understanding an edge, testing it that it works, and then putting in patience. You have to wait for that setup, because if you are not disciplined enough to be patient, everything is tradable in the market. There is no setup that does not work. Fair value gaps, Fibonacci, Bollinger Bands, what do you call this? Wyckoff indicators, everything works and everything fails. Every strategy fails at some point, because different weeks an algorithm might favor breakout traders. Another week an algorithm is supporting trend line traders. Another week another. So there is, it's a wild, it's an ocean that is wide enough for everyone to swim in. It's a sky that is wide enough for everyone to fly. But if you're not disciplined to stick to a strategy that you've tested, and you cannot see to it that you wait for everything the strategy says should happen first. You're not disciplined enough to see them happen. You are going to burn through years of hard work and waiting. You think you're waiting, but you're wasting your time because you're not learning. All right, because the difference between wasting of time and patience is very slim, very thin. All right, you might be thinking you are being patient, but you're just wasting your time. And what changes it? What changes it is your patience. If you have the ability to be patient and to be disciplined, then you can be sure you're not wasting your time and you're actually being patient. But if you are not being patient, you're not being disciplined, you're not learning from your mistakes, then you might as well be wasting your time. And yeah, that's that on GBPUSD. I'm not going to talk much on GBPUSD because it literally does everything DXY would want to do. So if DXY sells, GBPUSD is going to buy, and if DXY buys, GBPUSD is going to sell. Same with Euro USD, but Euro USD is cleaner. So if I say I'm bullish on Euro USD for the short term, what would that tell you? That should tell you, well, I'm bullish on GBPUSD. If I'm bullish on Euro USD for the short term, well, I'm bullish on GBPUSD for the short term. And what do we see? We see a tradable range right now from this low to this high. But I'm not interested in that because this move, look at this, it's in the rectangular range, regardless of this symmetrical channel forming. GBPUSD is in some sort of range that I don't want to waste my money on. And that's that about that GBPUSD. On my next video, I'll be touching a little bit on US oil and XAU USD. I have my analysis on them already, but I'm just not talking about them because they are not what I am immediately looking to trade. I made a video I didn't post talking about bullishness starting on US oil because we have this channel forming, all right, and we see it tapping into the channel host, and I think a short-term retracement is going to start to move into these inefficiencies and these gaps over here, these opening gaps. But I didn't post that video because I I lost the motivation to do it because by the time I was able to finish the editing and many other unforeseen circumstances, I just dumped it. And perhaps in my coming videos, I'm going to talk more on them, and then we'll be good. We'll go from there. So yes, my outlook for this week: bullish on Euro USD. I want to see buys continue so that we can now start looking for proper sales. Get good. And on DXY, I want to see price move into more discount prices, probably tap into one more sweep, maybe one more sweep. Maybe you could just, but we'll see. It could sweep into these lows and then buy up, or it could decide to come into these inefficiencies and create a new bullish trend. If this don't happen in July, it could happen in August, and that's that about that. Okay, on my next one, we will talk about these terminologies, the IPAs. I could talk about liquidity story, how to catch, how to wait, and general more of my thought processes. And that'll be all for now. Thank you guys. I'll see you on the next one.